Goeiemorgen, good morning, Dumelang. This is our first session of Nation in Conversation, a live recording of 2022. You're most welcome here. We have an esteemed panel. Theo, I think it's the 10th year that you facilitate.
Yes, it's the 10th year.
Yeah, and he'll introduce the panel, but I think it's going to be very enlightening. So welcome and enjoy. We're going to have very topical issues through the week. Generate a lot of content. Thank you for the media who cover our stories. I think the agricultural sector and the value chain must be at the top of the list of exposure these days. If you think about all the different media platforms and the exposure we get, we've managed to shift the debate to the center point of the South African conversation, and this is really what it is about. I think the one thing that we're trying to achieve is to sort of move the power back to communities. It is us who will make the difference. Think for yourself, who is going to make the difference in the next 3 to 4 years? Make a list of 5 people, and I hope your names are at the top of that. Because we have to take back what is ours. And this is what this conversation is about. How communities get together and face the challenges and win them. Theo, we're looking forward to your esteemed panel. Enjoy it. Thank you.
Thank you.
South Africa's agricultural sector is one of the most diverse in the world and by far the most modern and advanced in Africa. During the height of the COVID-19 pandemic in 2020, agriculture contributed 1/10 of South Africa's total export earnings at a value of $10.8 billion. Products like citrus, wine, table grapes, maize, and apples accounted for the largest exports by value. South Africa also exports wool, nuts, sugar, mohair and pears, to name just a few. South Africa is a net exporter of nearly all commodities produced and self-sufficient in all but a handful of staples. Imports consist of chicken, vegetable oil, especially palm oil, and some specialty products like coffee and chocolate. This highlights agriculture's strategic importance as part of the local economy. This sector is, however, not without its challenges.
Unlike in 2020 and 2021, where South Africa's agricultural sector was one of those robust sectors in the economy, I think this year, 2022, we will see the sector underperforming to an extent. Firstly, we are coming from a higher base of last year, those 2 years of solid growth. And secondly, the rainfalls that we saw since the start of the season did have a negative impact on the summer crop growing areas in central South Africa. We look at the harvest numbers now, they are somewhat over the long-term average levels, but compared to last year, we're still down, and I think that will give us some bit of underperformance. But I think in as far as employment though, we will still remain at levels where we have over 800,000 people that will be in agricultural sector. So blip a decline this year, but looking over the long run, are we still positive?
So considering growth prospects, one has to start in the global economy, and their prospects have dampened significantly over the past 6 months. If you consider the World Economic Outlook from the IMF, in October last year, they were expecting growth of 4.9% in 2022. And in April this year, they revised that downwards to 3.6%. Of course, there's a number of factors that influence that. One is China's zero COVID policy and the associated lockdowns that go with that. But of course, the big one at the moment is the ongoing war in Ukraine, which has unleashed a massive humanitarian crisis, but also caused significant damage in terms of infrastructure and economically.
The world economy currently experiences a lot of volatility. Part of this volatility is due to the current war in Ukraine and Russia. In agriculture, this has a spillover effect as well. These two countries is playing an enormous role in the economy and also in agriculture. And part of that is the availability of commodities, but also the impact they have on energy costs.
So the weaker global environment is obviously less supportive to South Africa's growth prospects. But the war in Ukraine in particular affects us in different ways. So the sharp rise in commodity prices may actually support some sectors, something like mining stands to benefit. But then there's also risks, things like accelerated inflation, the high cost of energy, fuel, food prices.
Most of our grain and oilseed farmers' agricultural inputs that we use on the farm is currently on record levels. When we talk about fertilizer, it's about 120% higher than the same time last year. We know our fuel prices is also on record levels, as well as our agrochemical prices.
All in all, the IMF is expecting growth of 2.2% this year and then a further 1.4% in 2023, which is still positive, but of course well below the levels envisioned in the NDP.
It is not my task to remind delegates of the sorry state of South Africa's infrastructure and other pressing problems, not to mention the load shedding and the state of our roads, the lack of sufficient economic growth. You can read all about that in the media. Rather, it is important to reflect on what caused some of these problems, which are not unique to South Africa. They occur in many developing countries, or what exacerbated them in the last decade. We had a decade of gross incompetence of the public sector, thanks to the Zuptas. This now lies behind us. We now have a president who understands intimately the relationship between good economic policies and sustained growth, employment creation, and a broadening of the tax base. I can almost guarantee you that dozens of the perpetrators of state capture, fraud and theft, which are essentially acts of sabotage, will be arrested in coming months. What we need to focus on a little bit is on the President's new policies. And we are reminded of the candid acknowledgement in this year's State of the Nation address that only closer cooperation with the private sector can take this country to a higher growth level and the ability of government to also improve the service delivery standards for all the people of South Africa. You can only do that with a growing tax base. And his hand is already showing. We've seen that in a magnificent budget where they married the twin objectives of welfare expenditure with market-friendly policies, the lowering of the corporate tax rate. We've seen it in the long-awaited auction of broadband spectrum. We've seen that also in the lowering of the fuel levy. And we've also seen that in the fourth investment conference. We have now secured more than 1 trillion rand in new investments over a 4-year period. On top of this comes records. We have shattered our export record last year, an increase of 60% in total exports to 1.7 trillion rand. And it's not just platinum, coal and iron ore, it's also agriculture and processed food. We've seen that in the March 2022 export level, 170 billion rand. It shattered the previous record, also in March, but last year, by more than 12%. On top of this, the ABSA BER, Purchasing Managers Index for manufacturing, has been running about above 50, the expansionary territory, for a long period of time, and it recently reached an all-time record high. The AGBIS IDC Index of Confidence in Agriculture also last year reached an all-time record high. There are other records that are almost too numerous to mention, but let me just also remind delegates of the fact that real household disposable income, which represents 63% of GDP, last year shattered the 1 trillion rand level for the first time. Most of this is spent on nutrition, and that is good for agriculture. Look out for the future. It's going to be brighter, I hope, soon.
Good morning, ladies and gentlemen. Welcome to everybody. I think we are all in an environment where volatility, uncertainty has become part of our narrative. South Africa and the world economy started this year with a balance between economic growth, inflation, and interest rates. And the question was, how are these two going to play out? How is the central banks, not only in South Africa but worldwide, going to tame inflation but keep the momentum in economic growth? That was a that was a complex decision. And then, all of a sudden, we saw a few things. We had the war where Russia invaded the Ukraine. We had massive logistical problems, not only in agriculture, worldwide. We had China imposing a zero-COVID policy. So all of a sudden, all these things made an already difficult situation more challenging. And unfortunately, that is the environment we have to manage our businesses, our finances, and our planning. So I have a great panel today. I'm going to start with Hugo Pinaar. Hugo is the chief economist of the BER in Stellenbosch, probably one of the most respected think tanks when it comes to economic analysis, economic forecast, economic scenarios. And Hugo, thank you very much. It's his first time at Nampo, so we obviously, as a first stop, we go to the John Deere exhibition just to show us this is what a tractor looks like, to get the idea, and then to one of the companies that specialize and is one of the sponsors of this, Bayer's Field View, just to get an idea of where technology comes into play when it comes to decision making. So Hugo, thank you. Professor Ferdi Meyer, director of BFAB. I think you're all aware of Ferdi as knowledge on this field. And if you haven't read or if you don't read the annual benchmark exercise that they put out, it's on their website. Do yourself a favor and spend a bit of time on that. Then I've got Kokkie Kooiman. He's a fund manager at Denker Capital. According to me, one of the most knowledgeable fund managers, specifically if it comes to the financial sector, the international sector. And I'm also going to ask him, he is also advising very high-level players in the financial services industry about the concept of DeFi, decentralized finance, blockchain, cryptocurrencies, that environment. So I am going to ask him. We had a meltdown last week, and even this morning one of the coins collapsed. We are going to talk about that and where that goes. But I'm going to start with Hugo. Where are we currently in terms of your perception, in terms of the South African economy, the big variables, and the growth rate situation looking forward? Hugo, how do you see that?
Thanks, Stuart. Good morning, everybody. It's a real privilege to be here finally. I'm going to be a typical economist and say on the one hand and on the other hand. So let's start with the positive news. I think if we look at the COVID situation in South Africa, so you haven't touched on that yet. So let's just quickly say something about that. We, after 4 waves of infection, I think we have a pretty high natural immunity rate in South Africa, along with vaccines or vaccinations picking up. So I think this year we're moving, and we're in the 5th wave, of course, now, but the economy is continuing. It seems like government has come to the realization that they can't lock down anymore. So I think South Africa is moving to a point where we're living with the virus. So we don't think the virus is going to have the same detrimental impact on the economy as it has the last 2 years. So that I think is a real positive. On the negative side, we've mentioned load shedding already. We have the KZN floods in the 2nd quarter. So I think the economy started off on a pretty good note in the 1st quarter. Activity started to pick up. The economy started to open up. But then we were hit in April by the Russian invasion, the KZN floods, load shedding returned, of course, and continues. And then we're now starting to see reports of strike activity picking up. So I think it's a relatively good start to the year, but I think the 2nd quarter is under lots of pressure. And then in the rest of the year, I think to a large extent it is what happens to the global economy and how does this interplay that you mentioned between trying to combat inflation, but at the same time getting the balance right by not being too aggressive on interest rates and not pulling the global economy into a deep downturn.
Let's take spend a minute on the interest rates. We have on Thursday the decision by the Reserve Bank locally. What factors will play a role, and kind of what you're feeling about what the Reserve Bank will do?
So yeah, I think there's no question they're going to hike again or increase the interest rate once again. So that would be the 4th consecutive increase. The question is just whether they do it by a 0.5 percentage point or a 1/4 of a percent. Now, we've been of the view that the Reserve Bank would stay gradual in terms of their increases, so stick with a 1/4 point at a meeting. But unfortunately, things have changed since their meeting in March. The one is that globally, the US central bank has certainly become more aggressive in their thinking of how much they need to do to tame inflation. So this has put the rand under quite a bit of pressure. The oil price has come down a little bit, but it remains high. So the long and the short is, I think the Reserve Bank is also going to do a 50 basis points this week. So also becoming a bit more aggressive than they've been.
Ferdi, for this audience, your specialization is agriculture. We're sitting in a situation where we have very high commodity prices, but we're seeing the high, strong input prices coming through. If you look at that scenario, and let's first start with the commodity prices, what is behind that, and are we seeing orange lights in that area?
Yeah, too. So I think there are obviously a combination of factors that we can look at, and the war, Hugo's already touched on it in principle. So we obviously have the issue that Ukraine and Russia, they are these big grain-producing countries. They are in the export market, specifically on oilseeds and wheat, and then obviously the fertilizer issue. So that has really fueled prices globally to a large extent, a lot of uncertainty in the world market. But the one thing, that we need to take into consideration, so obviously COVID and the logistical constraints have also resulted in a lot of that fueling of uncertainty, prices, logistics being a major issue. So we have prices very high globally. So let's start just at a global stage. What's interesting, though, is if we look at the stock-to-use ratio. If you analyze these cycles of commodity prices, let's say 2007 and 2008, when we last saw these very high prices, let's take wheat as an example. We're now sitting with a wheat price of $450 a ton, which we saw above 400s in the 2007-2008 cycle. At that stage, stock-to-use ratio was at 21-25%, very low ratios. And then we started building up stocks. And when we hit COVID and the war, we were at levels of 38-39% stock-to-use ratio. With the war taken into consideration and the potential impact on Ukraine and Russia and this whole global trade, we're still seeing, although the latest WASDE report, that's the World Agriculture Supply and Demand estimate by the US, they are projecting a stock-to-use ratio in wheat, for example, of reducing from 37% to 33%. And 33%
still substantially higher.
Correct. It's a lot higher than what we saw in 2007-8. So it's clear that there's a lot more. So we see globally soft commodity prices very high, and there must be a significant factor of uncertainty fueling these prices. And I think it's just kind of this compound effect of uncertain logistics, COVID. Governments are closing their borders. We see that now almost like weekly, these announcements. We had palm oil in Indonesia, wheat in India. And that's all just creating this bigger uncertainty. The good news for South Africa and for our consumers in this country is that we had export parity for most of the staple grains. For wheat, not. We're still trading at import parity, but we're certainly the areas that we can grow, and the farmers have shown it. And this speaks to your question around input-output relationships. So that's all about the margin. And the farmers have actually, the producers have in their intentions to plant. We're going to expand the total area under grains for the winter crop planting. So we'll still, it's a bit early days for the summer crop that we'll plant at the end of the year. So there's still some water that onder die brug moet gaan. We'll have to see the direction of input-output relationships. But for now, the margins are still positive. The key message is to lock in, to look at those margins and that relationship to get your timing right. We're sitting on a huge risk, obviously, if we're going to plant expensive and prices could come down, because stock levels are internationally not as bad as what we see prices. Not saying it's good, but it's.
So the orange light, or something that you should watch out is input prices are high. You currently get a great price for your commodity, but there's a risk that that commodity might drop in price.
Correct.
So in order to manage that margin, one should take precaution early and try to fix some of that forward to a great year, and all of a sudden this unraveled. Your perception on this unraveling of capital flows, financial markets, and then I'm going to get down to some of the unraveling we saw last week. But how do you see markets and where are we?
Yeah, Theo, so we have to go back to when COVID started and the global lockdown of economies. And that was the sharpest contraction globally for economies ever. And you can think of it, the taps were literally turned off and people had to sit at home. So your economies contracted sharply. And when it started opening again, you also had the strongest rebound ever in the economic history of global economies. And the problem there is that during that and in that lockdown and then the rebound, your supply-demand balances were disturbed because there's a lot of supply that was shut down, but the demand came back so strongly that we're just seeing
It's a mismatch.
And you can see that everywhere. I've just come back from Europe and airports, it's a nightmare. They can't get enough security personnel. Everywhere you go, it's not enough staff. And the same with commodities, the same with food, so that has unleashed inflationary pressures. And I think the important thing coming to the markets is that the central banks globally were behind the scene. I mean, it's almost like one-day cricket where the run rate they were scoring at was too low. And your run rate's too low, at some stage you're going to get into problems and you've got to step up, especially when something unexpected happens. The unexpected thing was obviously then the war. And so because you were already under pressure, now your inflationary pressures have increased even more because your oil price shot up, gas prices shot up. And so the fear now is that, well, you can see already the Federal Reserve Bank in America has hiked 50 basis points. Jerome Powell, the chairman, actually is saying, I haven't got enough visibility in terms of how quick and how many rates I'll have to hike. We do know there are more hikes coming. So in terms of markets, the markets were in the past few years a bit euphoric, and that was caused by low interest rates. Interest rates were so low that a lot of markets were mispriced, especially in crypto, we'll come to that, but the so-called profitless tech, because when interest rates
profitless tech also at some point became the driver of markets.
Absolutely.
And the massive companies in the world were profitless tech.
Absolutely. The profitless tech basically is, when there's new development, which is very good. I mean, the innovation will stay with us, but often with new innovation, it takes 10 years before it becomes cash generative. But when interest rates are low, markets are prepared to wait for that and pay up for that. Okay, so we've had, in what I've basically described, you've had a few things happen. Number one, suddenly with higher interest rates, global growth is going to slow down. And then with all the uncertainty, there's a risk premium built in as well. So that means that profitless tech, maybe instead of being profitable in 10 years, it might be 15 years. And a lot of companies, the profit margins are going to get squeezed exactly as you described. So, and then the third thing, with interest rates rising, Warren Buffett always says higher interest rates are like the forces of gravity to markets. They pull markets down because suddenly you reprice things. And maybe just as a comment, a lot of new investors that made a lot of money in the easy years don't really know how to price a stock. And with higher interest rates, it becomes more difficult. And that uncertainty, all at the same time, has led to finally the sell-off. The sell-off was always coming. And on radio we were regularly saying die mark is te duur.
Ja.
Jy weet, en nie in Suid-Afrika was hy goedkoop, maar generally markets were too expensive and people were saying you're too old, you don't know what you're talking about. But we knew when interest rates start going up, and that's really what's happening, and that's what the unraveling is.
But there's probably a whole generation in Europe and in America that from about 2008, 2009 lived in a world where money was freely available, where there was surplus liquidity, interest rates were incredibly low, and I see some of the trust Americans to come up with a nice term they called zombie companies, companies that rely on low interest rates and ample liquidity. But that mind shift, obviously, it will take time to work through the system. What will the impact be of that change in the cost of capital on world economies, and how can central banks react to that, and where would it leave us?
Theo, I think the one positive is if we go into the 2008 financial crisis, of course, especially in the developed world, household balance sheets were terrible. They were very indebted. So now we've had a decade of deleveraging in household balance sheets. So they are in a much better position now. And I'm not saying the higher interest rates are not going to hurt, but I think households in many parts of the world are now in a better position to sort of deal with these higher interest rates. So hopefully the hit is not as severe. And also, of course, these interest rates are coming from a very low level. So in level terms, there is probably a bit of scope to go before it really starts to become restrictive. So it's not going to be as accommodative, but we probably still some ways to go before it really starts to hurt. But I think the concern is just that because the Fed, Koki mentioned, because the Fed is so-called behind the curve, they probably should have started not tightening, but being less accommodative last year or already, especially in terms of the unconventional measures, the buying of assets, for example. Now they're behind the curve. Now they're almost forced into doing a lot over a short period of time, and that is disruptive to markets, of course. So to get this balance right between sort of dealing with inflation but ensuring that you don't push the US economy into a recession, I think that's going to be very difficult. And just a final point, it's also interesting that even the Federal Reserve is now becoming less confident that they can actually do this. You go back to March, Powell was asked, how sure are you that you can sort of engineer the so-called soft landing? And he was saying, no, we're pretty confident. They're not as confident anymore. Now they're starting to talk about the softish landing and saying that this is going to be a challenge. So, they know. They're now in a very tight spot here.
I want to turn to two specific topics. I think a topic that people haven't spent a lot of time on is the agriculture master plan. Now you were intricately involved in the design and the assistance and the writing of that master plan. And I do think it's a 71-page document, and it's people usually look at this and then I don't think they spend necessarily time. But your involvement in the master plan, if you were to give us a short synopsis of what do you think is the major achievements in there, and are you positive with the fact that it's been signed, and how does it work from here onwards? And I'm going to draw that all the way back to the agricultural economy. So let's start first with the master plan. Your views in terms of what is in there that excites you?
Yeah, so Theo, if you hear all these the kind of the talk and the media around the master plan, I think the reality is we've seen many plans. We've got the National Development Plan, and we've had Pakisa, and there are other master plans for other sectors of the economy. So the idea from the presidential office was the social compact idea, to basically have your social partners agreeing on what's the way forward for the country. And I think that's also that's the part that I feel positive about, saying we've had the social partners around the table. For the last 2 years, we've been debating this plan, and which is different than the National Development Plan. You know, we were also involved in the analytics around that. So from the BFAP side, we did the value chain, what we call the value chain deep dives for this master plan. So it's a commodity-orientated approach. It takes an end-to-end value chain approach, and I think that's the kind of the detail, that's the annexure that a lot of times, you know, people don't get to. Is saying there's a lot of detail in this plan actually, and it's very specific and very detailed. It looks at a value chain approach and whether this is from the farm gate all the way to the consumption side. If we talk about lower economic growth rates, if we, you know, the reality around a market-led approach, saying we need to grow agriculture inclusively. We need to get new people into the market. We need to have more black farmers participating, commercial production growing. How can we do this sustainably, get it going, and grow it? And then you need this market-led approach where you understand your markets. You say, what can you domestically do? Consumers are under pressure. Can we open up international market? It relates to competitiveness. It relates to our infrastructure, our ports, our roads, our rail, our policy around opening of markets. And then the registration of products, the Act 36, where there's a huge backlog of the registrar's office. All those elements were debated extensively, and the facts are on the table. And social partners agree to that. And I think that is, for me, the encouraging part, saying at least we've got a baseline and a common ground where we say, can we prioritize? There are a number of things that we need to do. The list is almost too long. And if I just think about infrastructure development, how far we've fallen behind, where do we start? Well, at least we've got a starting place and a prioritized list. Implementation remains always a challenge. It's not law, the master plan. It's a plan that we all sign up to and say we want to keep one another accountable. So implementation will always be a challenge. But what I do see happening, what has changed from the previous plans, is definitely the step up, this partnership between public sector and private sector, and the mandate for private sector to actually move and to say, what can we do and where can we? And there are many specific elements, just whether this is just helping to get the backlog out of the registrar's office, just to get product registration going, skills development, comprehensive farmer support programs. We have wonderful examples. I mean, you can look at the success of Grain SA's farmer development program, mentorship programs. So where can government and private sector, these 10,000 officials, extension officers that Cyril was talking about, our president, where are they going to work? Who's going to empower? How are they going to work with private sector together? I think that makes me excited. There are opportunities for it. Biosecurity, animal health. So I feel those specific elements are in the master plan. They have been addressed. We've been debated on, and people have signed on it.
I want to come to a specific point. And for a lot of the exporters, because the South African, a major portion of the South African agriculture investment and development is based around building this engine that produces goods for international markets. But those goods needs to get to a harbor, needs to get on a ship, and needs to get to the end user. That supply chain on the South African side, specifically around the logistics of the train, harbor, ship, what is in there about how do we address that problem? Because that problem is going to become bigger and bigger as the sector grows.
Correct. Yeah, so I mean, these are, I think we had our first comprehensive chapter on the kind of this logistic challenge in 2017 baseline. I can just go and check it again. But it's about 5 years ago when this real trajectory of rapid growth, especially on the high produce, high value produce side. So, 70,000 hectares more irrigation on high value produce that needs to get out of our market. So our projections are by 2030, we're going to expand volume-wise by 50% more product. So what we're seeing now as a bottleneck is as small as child's play, what we could see coming with the volumes coming in. So Tia, I think it comes back down to the focus. We would have hoped that the response would have been quicker, but I know the industry, there are currently very intense discussions going on between industry and government and the sector saying we need to get the ports fixed. And to what extent can the private sector come in? But again, we're talking about big investments here. And I think the reality is we're just going to erode any additional growth, because what effectively happens, that produce that you cannot get out, if you talk to the table grape industry currently, it's a huge challenge. 21 days you want to be out in the world market on the shelf. Now it takes 50 days. It's detrimental. You almost have to pay in on your account than actually making money. So we're going to cut out all this additional growth if we cannot get the bottleneck right. So I'm almost, talking to the fruit industry now, they are more severely impacted by infrastructure than by the war. Internationally, it has a worse impact on us than in the war.
Is there an example somewhere of what happens if the logistics doesn't work, if you can't get goods across the border? Where you produce a great harvest, but it remains in the country.
Yeah, well, so I think these tangible examples are now, we can see that in fruit prices, and we'll see this playing out currently if we're not getting this produce out. So that obviously pushes back your local prices, pushes down revenue. But a quick example, just where we don't want to go, and we see this in neighboring countries. Let's take Malawi, Zambia, Tanzania, a quick example. Those three countries, over the last 10 years, they grew their maize production rapidly. They went from import parity to export parity. They're now sitting with the cheapest maize in the world you get in Malawi, because they don't have agro-processing, they don't have storage, they don't have supply to get it out of their country. They're landlocked. So they're getting it into the region, some of it a little bit, but it's almost boom and bust. Now the smallholder farmers, they're just not getting enough for their maize. So to you, that's kind of the...
And that's because they can't get it out. They can't
get it out.
Access world markets, so it ends up as an oversupply in the local market.
Exactly. So to get it out costs them $200 a ton just to get it out. The value of the maize is 150. You add 200, it's 350. You're at the world prices. So, it just doesn't make sense.
So that's what happens if now just for everybody here, we have a specific sessions about logistics where we will include people with intimate knowledge of how train lines, harbor operations work, just to unpack that. But so you're saying that you believe that the harbor infrastructure currently is a bigger risk to South African agriculture than the war in the Ukraine.
Correct. Medium to long term. That's our biggest challenge. We've seen commodity prices go up and down. I think our farmers and the sector has managed, if we just think about avian influenza, back in cloven foot and mouth, that's obviously a bigger long-term issue. But I think we've got some bigger long-term issues around infrastructure, ports, the biosecurity. Those are our big issues that would cap our growth. Prices going up and down, we've seen that. We need to navigate those. But these are the this is the engine room. We've got a few pistons that might be, a few injectors in that engine that might be spraying not optimally into the engine.
It could seize the whole engine.
Yeah.
Kokkie, I want to turn the discussion completely around. I know that you are probably one of the foremost knowledgeable people, first of all, when it comes to the banking industry and capital flows, but secondly, in terms of cryptocurrencies, decentralized finance or DeFi. And I'm going to ask you specifically the angle about, we've seen last week some of these elements completely collapse, completely got wiped out in the crypto world. And perhaps let's just go back, explain a bit about the concept of DeFi, which is becoming a massive theme internationally, and then let's take it through to what happened in the last week or two.
Yeah. Okay, I'll watch the clock. This can take up to time when it's time for a class.
And you need a whiteboard. And you need to draw it for us.
Yeah. Okay. First, quickly, just in terms of what happened, just to contextualize it, Terra is the third largest crypto coin in the world, and market cap about 10 days ago still of $43 billion. And the price of Terra went from $85. In fact, I think the high at the beginning of the year was $110, went to less than 0.1 cent.
Less than 0.1 of a cent.
0.1 of a cent.
And that is, so we
It
talk
happened in
about
3 days.
maize prices going up and down. That's what happens when a market collapses from, let's say, $100 a high to 0.1 of a cent.
0.1 of a cent.
And that's the third biggest value-wise player in the crypto industry. So just get the grip on what happened last week.
So obviously that's caused panic, but let's first step back and think exactly, as you say, what is TradFi, what is DeFi? Okay, I'm going to try and do this quick.
Yeah.
And just bear in mind that I'm going to make logic jumps and be quite. Essentially, the founders of the movement, the blockchain movement, were libertarians, had lofty ideals and the two key pillars were permissionlessness and trustlessness. Permissionlessness meant they wanted to be independent, they wanted the system to be independent of regulatory approval of central banks. So you could move money to anybody, anywhere in the world without needing permission. That was really what they wanted. We know in terms of extortion and all those and racketeering, you can't have it, but that was the ideal. Trustlessness meant that you trust not an individual. So at the moment, if you want to transfer money offshore or you want to get payment from offshore, you have to work through a bank, and there's a whole banking system. There are corresponding banks, and it often can take 3 to 5 days. But you need to work through intermediaries. So they designed a computer system that would be trustless. You don't need to trust intermediaries. And obviously for us, me as a bank analyst in the financial sector, there's a real threat to the financial system.
To the traditional banks.
To the traditional, that's why it's called TradFi, traditional finance. And this is called DeFi. Now, how they did this is, and it was brilliant in design, and it will survive, is blockchain is a decentralized system. So it's decentralized finance. And a couple of implications, we might come back to that later. But so the DeFi system allows transactions. You can move money to your sister, your aunt in New Zealand or Canada or whatever via an email immediately. And she has it a few seconds later. And she can, again, pass it on. There's no system in between that. Okay, so what happened? So Bitcoin and Ether and Cardano and all these coins are effectively stores of value. That was a theory. And the tokens, like an Ether, you get from Ethereum, the blockchain net, you get Ethers as tokens for the work you do, the mining. But effectively, if you're very simplified, it's like getting shares. If you own the tokens in Cardano then or and other what they call NFTs, you're getting shares in this business. They will be valued like profitless tech one day when it's profitable, but they're not profitable. So the criticism against Bitcoin and all these other coins is it's like gold. It does not have real value. The value is in the minds of people who create demand and supply. Because Bitcoin, there's a shortage of, or there's a limited supply of Bitcoin, that created a value. Because there was more demand, very well marketed.
But it's not an asset that generates, there's not one morning more Bitcoin. There's not a dividend, there's not a cow, there's not a fruit. It doesn't generate its own growth.
Warren Buffett always says the disadvantage of gold, you can put it on your table, and you can polish it, and you can look at it, and you can enjoy it, but it doesn't earn you anything.
And it's not more tomorrow morning.
And there's not more tomorrow morning. And if you buy farmland, you get your yield, and you get
You've got
nothing.
all those elements in there.
So the problem with that was it was literally a question of supply and demand. There was limited supply, still is lots of demand that pushed the prices up. And as we all know, that gets the whole human emotion of greed involved, because people saw these things go up, and people have braaivleise, and they say, yes, I bought Bitcoin, I bought Ether, and I bought that. And the guy says, well, how have you done? He says, man, it's all 800% up. And one of the big mistakes, and all the marketing material I saw were guys were saying, look at the market cap of the whole crypto industry compared to the stock exchanges. And you can see how much this can still grow. But it's not like me saying, look at Capitec, great bank, but look at its market cap compared to JP Morgan. JP Morgan International Bank, Capitec, if you look at that, you can say it can grow, but Capitec is in South Africa.
It can't grow into the
compare
JP
those two.
Morgan
And
market.
so that's how it was sold.
But there was another argument to that, is people used to say or said it can become a transaction mechanism, but if you look at the value and you look at just one day's turnover on Visa or MasterCard, you realize it can't happen.
Transaction per second in Visa is 75,000. Transaction per second on most of the block exchanges is still 5,000. And they're working on
So it's 5 versus 75,000.
Yeah. Okay, so now what happened? Sorry, this is a lot of background. So these coins became investment mediums, and there were returns promised on these. And Terra, the one that's collapsed, the investment return was promised was 20%. But there's nothing that backs it, and there's no regulator. Remember, it's permissionless. So there's no regulator. There's nobody who checks the balance sheet of Terra to say, how is the money invested? Is it? Not sure if you saw yesterday. Yesterday, Ubank was placed under in curatorship. So it's actually a bank that serves mine workers and farm laborers. Here you've got the Reserve Bank of South Africa, who does its audit on Ubank, saw that at capital levels were getting very low. It puts the depositors at risk. And it said, I'm going to appoint a curator to protect depositors. In the whole crypto industry, there's nothing like that yet. All these changes will ensure regulation will come. But okay, so here you had Terra, people buying Terra, thinking they're going to earn 20%. Now, by the way, guys, just use your common sense. If someone in today's world of still negative interest rates in Europe, okay, it's ending, promise you 20% on an investment, I mean, there's something wrong. Because if they take your money or whatever, your asset, and promise you 20%, they've got to invest that at least at 25. So there's a lot of gearing, a lot of risk-taking. And so essentially that happened, long story, because of minting, burning, we can go into that. The algorithm that behind that broke down, and the price started falling. It lost its peg to Luna, and it doesn't really matter exactly what happened, but the market, the investors lost their confidence in Terra and suddenly saw, but the king is naked.
There's nothing underlying.
There's nothing there. And started selling, and that caused the panic. And, in all these things, once the panic starts, especially if there's nothing underlying. So now there's an irony here, and there's a few things that are going to change. Terra is what they call an algorithmic coin, crypto coin. You also have different stable coins that are backed by dollars, or there's actually stable coins backed by gold. So in other words, Tether is the second largest, and unfortunately they must be very upset that their names are so close to each other. Tether is backed 1-to-1 by dollars. By the way, there were audits and they found they were not backed.
Okay.
And then the Tether price collapsed as well. Remember, that's the risk if you go permissionless. There's no regulator. No protection. Yeah. Okay, the permission is going to come. But so Tether, which is backed by dollars, actually obviously immediately put out statements that we backed, and this is and the same with the other coins. So the coins now that are algorithmically based are collapsing because people realize there's just a computer standing behind it, but no real. Whereas your stable coins that are backed by TradFi finance. Now, by the way, these guys, sorry, this is a whole movement, this libertarian movement, anti-government, hate fiat currencies.
A normal and fiat currency is
a rand is a fiat currency. And why do they call it a fiat currency? Because fiat means that your central bank can, what they call, do a rug pull on you. And that's what happened in Zimbabwe and Argentina, Venezuela. Your central bank just prints more money. Well,
and that's messes, and then the value is gone.
So your value is gone. So they hate the central bank ability to devalue your currency. And that's why Bitcoin was always, there's a limited, okay, but the irony of the whole issue now is that those coins that were linked and backed by fiat currencies were the ones that survived and are strong.
So that were linked to what they hated.
What they hated.
So what they hated provided the support.
It is actually, sorry, I hope you're not too heavily invested, because it's actually funny, but I'm not invested. But it's actually, so the good thing is, and by the way, I must just get this out there in the open, as they say, the blockchain technology is a real breakthrough. It's a new way of thinking, a new way of doing.
And that will survive.
That will survive, and that will come through and like JP Morgan has already created its own blockchain where it allows clients in 40 countries to do currency transactions on its blockchain 24/7 immediate. So
with one another.
With one another. So I just saw HSBC in London last week, and they're doing the same with Wells Fargo. So the blockchain as a technology is going to improve efficiency in the financial sector, and that is good. But the currencies, the cryptocurrencies that were a result of it, and to motivate people, just maybe one more. So just think of, the decentralized system, instead of having a bank where you've got a lot of people on our computers these days who record your transactions, the DeFi system, blockchain system, uses validators. They're also called miners. So all those people who mine blockchain, who set up those computers in their back rooms and are mining blockchain, they're effectively validating transactions that take place. But they do that because in reward for that, they get Bitcoin. Well, in this case, Bitcoin or whatever, other coin. But you're only going to do that if you were a miner of Terra. The Terra price falls. You're not going to mine Terra.
You're not going to continue doing
because
it.
you're not getting rewarded.
So
and that would also felt
the validation is gone.
So on the Terra blockchain, the validation disappeared, and so that's why it's actually stopped. So it's a huge impact. Few people in the press haven't actually made a big thing of it. I'm surprised.
I think a lot of the press don't understand the magnitude of what's happened last week.
Yeah. No,
they don't understand the magnitude.
I think you're right. And so this morning you see, the other coins are starting to collapse now as well. Are people starting to say, okay, but what is real? And so your stable coins backed by fiat currencies will come through, and blockchain will come through. But in the meantime, you're going to have a lot of turmoil. So those of you who are gamblers, if you did, I can't call it investing, but I was asked this morning, RSG asked me just to comment, and so the first thing, a question I get after that, so is nou 'n goeie tyd om te belê? But remember, markets are falling to such an extent as well that you can now go and buy JP Morgan, a bank with a 100-year track record, giving you ING in Holland, giving you a dividend yield of 6%. So, you could go and buy crypto now, because now is a much better time, and now there's panic. That's normally when you do make your best investments, but there's panic in the real markets as well, with more certainty.
In the real market, where you actually have got a growth asset that generates income, generates profits, and pay a dividend.
And you've got a regulator behind it to make sure it's...
Okay. So thank you very much, and I hope you're all 100% aware of what's going now on in the crypto blockchain market.
I think it was 5 minutes. So.
It was well done, and I think it was great, but we get an idea. Let's get all the way back here. South Africa we talked about Ferdi assisted us with a master plan in agriculture. But from a South African point of view, why are we struggling to get our growth rate to where we need to be? We're almost in this rut. There was a time prior to 2006, 2007, when we were growing at 5% a year. Can you believe that? There was for 3 or 4 years we were growing at 5% a year. Why can we not get back to a growth rate that at least generates growth in excess of the population growth, and get to a point where we get more people formally into the economy? What is the hindrances?
Theo, can I just quickly come back to, you were looking for examples on the export side, and it's trying to answer your question. I think it may help. So there's a very good example in the mining sector currently of the logistical constraints on the coal side. So with the war in Ukraine, Russia is now not supplying the same. So Europe bought a lot of coal from Russia. They've now banned that coal. They haven't banned oil and gas yet. They're thinking about it, but they have banned coal. So Europe is now frantically looking at other suppliers of coal. South Africa traditionally exported a lot of coal to South Africa. We have the right quality, etc., etc. The coal is there. We can't meet that demand because of the logistics. So here was
so it's not the mining that can't. The mine and the resources and the reserves are there.
Everything is there. They are geared to do it. They can quickly switch markets, but they can't export it because of the rails and the ports. So a classic example of a lost opportunity. So the miners are getting the benefit of the dramatically higher coal price, so their profits are shooting through the roof. But the point is the impact on growth, broader, the volumes of export, we're not getting that benefit, which is a big shame. So, and I think that's agriculture, but it's certainly in mining also a big hindrance. So that's the one thing, these logistical issues that permeates throughout the economy. I think broadly, Theo, there's a confidence problem, and the confidence problem feeds through into a lack of private sector investment. So those years that you mentioned when the economy was doing well, one of the key ingredients was the public sector was investing, build up to the Soccer World Cup, etc. But the private sector was also investing. And that key link we don't have currently, and we haven't had it for many years. So we need to get to a point where there's greater certainty on the policy front. We're starting to see that here and there, but I think the private sector wants more. They want to see on a 3-5 year outlook that this certainty will continue so that they can start to invest. And again, we have a lever here in terms of green energy. Now, this has been said often, but I really think if we can just get this green energy programs off the ground. Again, the plan is there, the contracts have been signed, but now there's numerous delays of getting shovels into the ground. But I think if that thing can pick up and we can say to ourselves, we're starting to do the investment, in 3 years' time, we will reach a point where we don't have this binding energy constraint on the economy. I think then we'll be in a much better place than currently.
Kokkie, you visit numerous countries on an annual basis, and you talk to specifically the financial sector, but you get an idea of what countries do to get back on a growth rate. And those countries in Southeast Asia, in Europe, in the old Eastern Europe, in the rest of the world, what are they doing that we are not doing? Where's that gap? Why does Hugo say there's a confidence gap from investment point of view? What are we not getting our hands across, or arms around?
In essence, it's regulation to change South Africa, but the main problem is a government, and this is not about government bashing, but it's a reality. It's a government ideologically want our economy to be government led, and a distrust of the private sector. So, and in the ANC's thrust to change what our economy looks like and to get black participation, they brought in BEE and they brought in, unfortunately, cadre employment. So the central thing that you got wrong is you lost meritocracy. So you didn't appoint the best person for the right job. And it then even went further. You got politically connected people. So essentially, the whole infrastructure that is crumbling is because a lot of people who are appointed now throughout the organization who don't know what they're doing, don't take pride in what they're doing, can't be fired, and essentially that causes the lockdown. So your countries that, Korea is a very good example, Singapore, something like even the Czech Republic, Georgia is actually a fantastic example where the emphasis was on government and private sector together, making sure that you appoint the right people, accountability, and it's very simple things. And our president is starting to see it. I think he saw it all along. He's just hamstrung by the people around him. But if you want to get it right, if you want to get harbours, railway lines, you've got to get knowledgeable people in, and you've got to take like strong action. I would, and if, maybe if you just think of it, the two things that go wrong in a system like that, the one is your market doesn't work. What does a market do? A free market. Free markets ensures that there's information that goes from consumers to producers about where there's shortages. So producers very quickly change to meet demand, and prices react. But the government has, in a lot of ways, and especially in the labour market, has distorted or controls. So your information is getting, even to government, they don't really still understand, or they didn't understand what was happening in railways because the market mechanism is not telling them. The second one is your democratic system fails. Now, in most countries, what's happened in South Africa, the population would vote these guys out. But because your democracy here doesn't function properly for many reasons, the ANC has been allowed to perpetuate what we've had. So you actually need both, and it's starting to change. I mean, you can see new parties coming in. That's very important. So your democratic system broadens. There are more challenges. It's not a race issue anymore. It becomes, in India, 3 governments have fell over the last, I think it was 20, 25 years, because the price of onions went up too sharply.
And then they got voted out.
The population voted. It was first Congress and then the BJP, but they voted the guys out, regardless of whether they're Hindu or not. They voted the guys out because they didn't control the food prices. And the South African population, and we ourselves, I mean, you said at the beginning, we must take control. The population must learn to play its own role in a democratic society, and that's the best way to change it.
Hugo talked about Ferdi, about trust to invest. What for me is always different coming to Nampo for the last decade is that it's almost like there's a resilience in the agriculture sector where guys would say, I will still buy the infrastructure required. I will still upgrade my production unit. I will still invest in my business, although they've got all these questions. So there's an underlying entrepreneurial resilience. We are going to come through. We're going to make it work. Hugo talked about trust. Your experience, are you seeing a change in that dynamic? And what does the agriculture sector have that creates this optimism when you hear about expropriation and water rights and all of these things, but they still invest in their business? I mean, if you walk around here, it is a world-class show in terms of technology, machinery, infrastructure. So my question is twofold. Trust, are you seeing a change in that? And why is the agriculture sector on the front foot and some other sectors not?
Yeah, so maybe let's start with that end and say, how can agriculture do it? And I'm taking my hat off to those farmers in Ukraine that are planting now. Just imagine that country is in war and they are planting. So, if the projection is actually that they will still manage to export 10 million tons of wheat compared to their 19, and they're at war.
They're going to plant.
So those guys are putting in a crop and it's at war. So, there's obviously deep down in an agriculture person, there's some form of optimism, of belief. And I think it's in your nature how you think about risk. It's different. So, that's being in farming, and there's no industry where you can really feel the intensity of risk as an agriculture. Honestly, you can run a business. There's always risk involved. But if you see that crop, if you put it into dry land, huge amount of inputs. Theo, just in terms of investments, if we think about our irrigation sector, I mean, those guys took out crops that they believed didn't have growth potential anymore. and they planted, let's just think about our orange citrus expansion, blueberry expansion, put in tunnels. We're talking about R1 million a hectare investments, times 70,000. We're looking at 60, 70 billion rands that were invested
by individual farmers.
Individual farmers, companies that went for this. And this is like you'll only, with some of the macadamia nuts, you'll only get break even your returns in 5-6 years down the line in terms of cash flow. I mean, that's the kind of risk appetite and investment that these guys are putting on the line. And for me, so there's this investment appetite, this opportunity for creating growth. And we've seen this. So we talk about these numbers very easily, kind of saying, you know, agriculture grows we had fantastic 13% and then another 8 to 9%. This year, you know, we at a very high base, and I think with the higher prices, we might even manage a little bit of a positive growth because we're still at very high levels. But actually, the engine room, there's always something happening, and it's investment in technologies, investment in new opportunities for expansion. So how do we manage to foster this trust, this belief in South Africa and in our society? Is through, I believe, this partnership idea and communicating, not talking to ourselves, talking to the world out there and our colleagues, our partners in government, in small, in large, in the total community, saying, I'll give you a practical example. In the master plan, there was this issue. Let's take red meat as an example. Red meat exports. 5 years ago, 8 years ago, we were net red meat importers of beef. Now we are net exporters of beef. But we're only scraping the surface. We can do far more. The question now, let's say with government and stakeholders around the table, was, but why should we open up more markets for you? Because you're only a handful of companies getting the benefit from these exports. But the reality, then we need to think about the whole chain. We have 40% of our herd, we talked about those numbers yesterday, in the hands of newcomers that we can make far more productive, that we can actually pull into that export market. Our local demand, he could talk about our local markets. We don't have enough consumption power, if I can put it bluntly, to buy all that meat. There's no way. We have to get it out. So that release valve is linked to the development, the productivity of these newcomers. So, and what is the government's role should be to regulate and to look after the vulnerable and to do this developmental role. And that's, we haven't started even talking about development finance. So, you know, how can you get a market open, how you can develop your finance that you can become more inclusive. So coming back to your question around confidence and trust, and how do we trust one another, is if we can take this broader message across saying, what do we need here actually benefits the broader society, and we can uplift poverty. We can pull more people out of poverty. And we can only do that through creating an investment secure environment. You won't uplift people out of poverty with government alone. It's just no way. But if you can create this environment where you have private sector investing, and through the correct regulations, mechanisms, and environment, you can start to pull your poverty, you can pull people out of poverty. If that's kind of a broader sense.
So I'm going to, before I go to everybody for a comment about the next 3 to 5 years kind of scenarios, what could play out, major changes, major variables that might play a role. Just fairly one question. Are you picking up that what you said now, does the other parties in the social compact, do they buy into this logic, or how would you describe that?
The colleagues who are involved in business buy it 100%. I'm a firm believer of that. If you've been in the business, if you felt it, and you see what the realities are, I think they buy it. And I think there's a strong contingent in government that also understands and sees this opportunity. And if we can ensure that our narrative and our analytics and the way that we communicate and that we hand that we do business is in that spirit, I do believe we can get a shift to. So, it's difficult to say kind of percentage-wise in which direction, but I do believe that this narrative is changing, and it's coming. I think the president is focused on that in these partnerships. Doesn't mean that we don't have a lot of rotten apples that we need to sort out, but I think there's a shift.
Hugo, let's go back and talk about. I'm going to ask everybody the same question. If you think of the next 3 to 5 years, and I'm not going to ask for a prediction because I don't think that got any use. What would you say are the major variables at play, and what are the kind of scenarios playing out in the medium term, 3 to 5 years out?
Okay, sorry, I just quickly have to come back to this again. Just a remarkable statistic on agricultural fixed investment last year. So if you look at total in real terms, so adjusted for inflation, total fixed investment in South Africa last year, not just private, total private and government. If you split it by sectors, the increase, so the rand billion increase in that last year, 75% of that increase was agricultural investment. So it's a very small sector of the economy, but it had a massive impact on the increase in investment last year. And of course, this was now very large crops, lots of new machineries, tractors, etc. But that is really a remarkable statistic for such a small sector to have such an impact on investment. Anyway, sorry, I just thought that's perhaps worth.
That comes back to the point as to why does this sector, in this environment, keep having the confidence to invest back in that in the sector. But your view, 3 to 5 years, major factors?
Yeah, so I think perhaps a couple of things here. The impact of the war in Ukraine and also some events before that. What does it do to globalization? So we had decades of increased globalization, right? The world was opening up. Trade, China came in, they became part of the World Trade Organization, etc. There is now a risk that we're moving into a world of I don't want to say deglobalization, but looking inwards. In South Africa, we talk about localization, for example. In the UK, they talk about leveling up. We know what Trump did. So I think that is a trend to watch. And of course, from an agricultural sector, from a mining sector, manufacturing exports in South Africa, I think this is a key risk. Besides our domestic issues, I think for a small open economy, we don't want the world to be looking inward, right? We want more globalization. So I think that's something to watch, perhaps one of the longer lasting impacts of the war. If you have a sort of a bipolar world, sort of go back to a sort of a so-called Cold War, Russia and perhaps China in one block versus the Western countries. I mean, that would be a very adverse longer-term consequence of the war. And I mean, I think if I can boringly come back to, I really think in South Africa, the key thing we need to get right is the energy transition and getting more private sector capacity, being less reliant on Eskom. And I think if we can just get that right, I think we're setting ourselves up for a much better decade than the decade just passed.
Hugo, just before I move on to some of the other panelists, in terms of your formal official BER forecast for the rand, what are you currently looking at? and why I'm saying that is something that at least gets published. There's a team involved, there's logic involved. So I'm not going to ask your opinion, your published view as a BER. What are you kind of broad strokes? What are you seeing?
Yeah, so I mean, in broad terms, we see the rand moderately weakening over time. This sort of sudden weakness we saw now I mean, we probably thought that would happen earlier, given what is happening in the world. Then it didn't, and we sort of revised the forecast stronger. And of course, the very second you revise it stronger, then the rand starts to tank. But so broadly speaking, I think the rand is probably where it is now. It's probably gone too far. Or weakened too much over a short period of time. So I wouldn't be surprised if things settle down a little bit internationally, that the rand perhaps strengthens a bit from current levels. But over a 3-5 year view, we think it will drift weaker.
Thank you. Ferdi, your view on the major variables, projections that will play out in the next 3 to 5 years?
Yeah. So I think in short, so Hicho mentioned obviously the whole change, the way the world is going to trade. I think that's for agriculture, that's critical. Will we be able to access the markets that we're currently accessing, the trade partners that we're currently having? We talked about infrastructure. Will we get it out of the market? We need to get that in the next 2-3 years, hopefully quicker. Get real impact at the ports, get real impact at the rail, that we can see that changing. Too, I think the climate, energy and climate, the farmers are, my dad's been farming for 60 years, and he always he says, well, climate change, guys, he's been having extreme climate events for many years that farmers have managed. But we are seeing, these events becoming, we kind of see more extreme events happening, and we see them. So obviously your droughts and carefully management of your cash flows, I think for the next 2-3 years is critical. We've seen far more people going out of business in the downturn, obviously, than the upturn, because you always kind of hope there's another season coming with high prices. Our projections, if we work with our global counterparts in the US, look at their forecasts on S&Ds, how they will recover, and that obviously depends on how the world is going to look after this war. Somewhere, hopefully the war soon will end, but then to kind of take stock and say who's going to respond when and how they're going to plant. But, just looking at that commodity price cycle, we are seeing lower prices in the next year or two, and it can come back very quickly. And then the timing, obviously, for our farmers to get that right, and input costs, input availability, I think currently an issue. Again, that would also be sorted out depending on what the world and how Russia is going to come back in again, and etc. So I think those are the key elements for us. We've talked about the trust part, and I think that remains still the biggest. Currently, the opportunity with good margins is we are opening up more of that idle land. There's opportunity because there's margin in it, but really the development finance part, to say, how can we get more? We have 4.8 million hectares sitting in government's hands, land that was purchased, that was commercially farmed, which is currently 80-90% not productive. If we can get that farmland
back as a start in the system.
Just that as a starting point. Let's get that into a market, get it financed, get it supported with comprehensive farmer support. That in itself is a huge amount of additional jobs, additional output that we could create.
Kokkie?
Yeah, maybe I should just start off with China, because we've just been ignoring China, and just bear in mind what's happened in China with the whole collapse of the real estate system, the property sector. And we always used to go and visit the Chinese banks, and we'd see there's an accident waiting to happen because it was just overbuilding. And that's unraveling, but it's almost at the end. And at the same time now, President Xi has made it worse by his COVID policy.
Zero COVID.
Zero COVID. But that will end. So I think the slowing demand from China will reverse, and that will be good for the world economy, let's say by the end of this year.
And their policy on tech, what's your view on that?
He's trying to reshape the whole psyche of his people. He's trying to, in essence, what he's trying to do is more socialism, so that big companies, big tech doesn't abuse and misuse consumers. And that's really what a lot of the regulation is going about it in what we as Westerners see as a ham-fisted way. But that will, obviously important for Naspers in Tencent. The real price falls came because of the unexpectedness and now the uncertainty. But once he's achieved, and the signals one is getting that he's achieving what he wanted to set out, then you get the certainty, and then I think, the tech sector there will also, because China will still remain one of the strongest growers. I mean, Indonesia is another country with 5%, 6% growth. India will obviously continue to grow, but China is still the biggest. Europe, a lot depends on the war, but even Europe, if you think 1-2 years out, the whole refugee problem, the whole needing to rebuild Ukraine, I think Europe will also finally start growing. But the big one is the US. The US has come out of this as the strongest economy in the world. The consumer, as you said, the consumers are very strong. Their balance sheets are good, so consumer spending. So it just depends on whether the Fed hikes interest rates too quick. But while we still get the inflation pressures and they're hiking, the dollar will remain the strongest currency, because the EU and the UK can't hike interest rates at the same pace. So the EU, the euro, and the pound are unattractive currencies compared to the dollar at this stage, and the rand as well. So for South Africa, at the moment, it's still a good period because commodity prices stay high, food prices stay high, and I think as Fadi has said, it's such a pity that we haven't got the infrastructure, but misuse this period. But the dollar is already maybe too strong. And so I would say in 3 years' time, you'll have 3 results. You'll have definitely higher interest rates, which is good.
Worldwide.
Yeah. Worldwide.
Almost a normalization to the pre-2007, 2008
quite correct,
era.
Quite correct, because you're also ending the quantitative easing, you're having quantitative tightening. And it's important for growth and for world markets to have interest rates. Okay, different topic, but higher interest rates. Because of slightly higher inflation, there's huge labor shortages, so that will keep that going. But I think lots of volatility, but gradually growth. The risk is just if the US goes into the hike interest rates too sharply and it goes into a recession. But because I think the consumer is strong, corporates are generally strong, I don't think it will be a deep recession. So that's good for the rand, in that the rand will, I think, also be more stable. And we'll also have to live with higher interest rates. So that's a big drawback for us, just our high debt levels. And so it's almost a number one imperative for the government to try and get the debt levels down. Lower debt levels means lower interest rates. It means you can plow back more into the economy. You can use money for education. So I think the debt levels is very important. So growth and the debt levels. The debt levels you have to do by privatization, So actually for South Africa, there are actually levers that are conceptually easy. It's ideologically for them to do it. And I think the president is well aware. I think Roelof is right there. Certainly if you compare South Africa to where it was 10 years ago, I mean, just imagine if we still had,
some of the Zuma era.
Exactly. So we are better off. And I think we can be hopeful.
Before we take questions, I'm going to ask one more question. Before we take one more question to the panel, and specifically Hugo and Kokkie. It's an anomaly, something we haven't seen in 40, 50 years, where actually America's inflation is higher than South Africa's inflation. It's a complete something that nobody would ever have predicted any time in the last 30 or 40 years. American inflation higher than our inflation. What do you see, first of all, Hugo, where does that inflation play out? Is it, again, the Fed was confident a number of months ago that it will be transitory, I think is the
transitory,
word. Transitory, it will be so, it'll come and go. Well, it's not really going. So what's your view on the inflation rate, and where does that change this discussion?
Yeah, so I mean, it is very strange to have this situation of South Africa being lower than the US. There's lots of reasons for that, which we won't go into now. Look, I don't think it's a sustainable situation.
You think it'll wash out?
It will take time. Look, I'm not on the look. It's not transitory. That is clear. There are too many supply side shocks going on. China again now with zero COVID. That's more supply chain bottlenecks that's resulting in pressure. So I think it's going to take time. And it may need a US recession to wash it out. Unfortunately, that may be one implication here. But I think if you take a 3-5 year view, I can't see US inflation still being higher than South Africa.
Kokkie, the US long-term bonds is starting to look attractive.
Yeah, it's now around 3%.
Yeah, and it's starting to look attractive.
Starting to look attractive, yeah.
Which hasn't happened for probably, we've had a bond market probably 10, 15 years.
Yeah. So I think the key, we had a long discussion on that last night as well, but essentially what central banks...
Over a bottle of wine, so
yes.
It's just...
We must smart a lot.
But what central banks are trying to do is to ensure that inflation expectations don't get built in. The German consumer expects inflation to be 4.4% next year. That worries the Deutsche Bank because that means your labor unions are becoming more and more powerful, are going to start off negotiations in Europe with 4 to 5%.
Something we haven't seen for decades.
So, and that could continue inflation. And so that's why I think the interest rate hikes will be sharper than we would otherwise have seen.
Well, thank you very much to my panelists, Hugo, Ferdi, Kokkie. Let's give them a hand before we take questions. I think this was an absolute brilliant discussion. So we've got about 10, 15 minutes for questions. Are we not going to take 5 minutes? We've got 5 minutes for questions. So let's take 2 or 3 questions and then answer them. Is there anybody? There's a question. There's 1, 2 hands. So let's take those 2 hands and then we answer the questions. There's one and then there's one.
There's one in the front, yeah.
Morning, thank you. That was fantastic. Ferdy, to you, just 2 questions about the AMP, if I can put it that way. The one is, you said there was quite a deep dive down to value chain level. Does that extend right through to what's required in terms of exports, that investment in infrastructure? A massive commitment from the private sector to participate. I presume that thinking also runs with government through, and is that reflected in the AMP itself? That's the first. The second on the AMP is, one of the partners, Labour, didn't sign. How significant is that? And how do we bring them on board going forward?
Sure.
Because it's been signed by government and business, if I understand it.
Sure.
Thanks.
Thank you very much. The other question there, Kali, thank you.
Question latch onto the previous one, also relating to AMP. And we realize it was a difficult process, especially to satisfy the needs from the far left to the far right. Now we've got a new master plan, and now it gets to implementation. And we know that government alone can't do that. So my question is, with all the experience we've got from commercial agriculture, what would you say should be the role of commercial agriculture to take hands with government, like in the private growth initiative, to really see that we can implement this master plan?
Thank you, Kali. Is there any other questions?
Yeah,
There's a question there. There's a mic coming from, there we are. Thank you.
Thank you. It's Langa Simela from APSA. My question also links to the agriculture and agro-processing master plan. But my question is, we had a number of master plans coming out of the PPGR, the Public-Private Growth Initiative run from the presidency. And I'm not quite sure actually which sectors. I remember the big learning was from the motor industry. So are there other master plans that have gone ahead and made progress? And are there any learnings from that? Because I remember the whole thing was, let's grow the economy by 5% by 2023. That was a whole initiative around that. So now that we've signed ours, is there anybody taking the lead that we can learn from, and what would those lessons be? Thank you.
Thank you very much. We will then, Ferdi, it seems that the questions are to a large extent on your plate, so the floor is yours.
Okay, I'll take a quick one. So the short answer on the ports is yes. So on the grains and oilseeds, so there were various clusters, the way that the negotiations were structured. I think that was interesting how that was done, because it's important. There were in the value chain, so we had a grain and oilseed cluster, we had a livestock cluster, and there was a horticulture cluster. Those 3 clusters, it was pretty straightforward to know what are the key things to get these value chains, the interventions going for inclusive growth in these value chains. So the short answer is yes. The ports were They are listed in detail there. What are, kind of the volumes coming through, what needs to be done. But the costing around that, for example, that all now needs to be, so there now needs to be like a round table, and where industry sits with government and says, these are the targets, this is what we've agreed on, and this is obviously public spending, because this is big money. This is, private sector, this is where you have a limited amount of impact to really go and fix ports, but there could be certain roles that private sector can play. But helping to shape and to narrow down and to say these are the priorities, that's what's, I think we've covered that amount of detail to a large extent. Secondly, and I think this links also, Kali, to the implementation, what is the role of your commercial agriculture? And again, I think just coming back to what I previously said, it's a narrative in taking hands and saying, colleagues, what we're doing here is not only good for commercial and for these, we've seen so many reports around concentration and stuff. It's a lot of times, a lot of respect to the research done out there, but it's a lot of times out of context. You need to put it in context, and we need to be careful the way that our narrative works, and that we explain carefully the context, how we can pull new players in and take them along in our journey. And we need to do this more met meer meaning, like focused. We really need to be focused on that narrative and bringing people along. Langa, your example, there's the poultry master plan. And I've recently talked to stakeholders again last week, actually. They were there when the agriculture master plan was signed. Because I think there was a bigger expectation out of this market master plan that we can be more specific. Like, how much billion is the industry going to invest if government closes that kind of imports or something? And I explained to them from the start, we're dealing here with agriculture and agro-processing. We covered 22 value chains in detail. But there are so many more value chains that you can do. So the poultry master plan had a benefit because it was only one value chain. Okay, so with the various players. And if you talk to them, if you talk to the DTIC and to ISAC, the SAPA Poultry Association, they've actually achieved some success around managing imports. They got that. The private sector did make a lot of investment getting new black farmers into contract growing positions with financing, with markets, with day-old checks. What they haven't succeeded yet in is, for example, the export market of high-value broiler meat, which we know is important to get more growth. So we have a mixed bag, Langa. So I hope I've kind of covered those.
The one about the one party not signing, Labour not signing.
Oh yeah, sorry about that. Yeah, so that's correct. So until like 5 minutes before the event started, and then, Prof. Corbo is a fantastic facilitator. So what ended up is that Labour, there is a letter of commitment to the process. Let's put it that way. So Labour saying they are supporting the process. They want to stay in the game and negotiate with their partners. There are 2 or 3 technical things where commercial and Labour don't see eye to eye. And I think there's a lot of material on the table, and I think we can get a settlement going between Labour and commercial to fine-tune that. So it was important for the minister to have Labour's commitment to the process. So it's not like they are walking away.
Well, what was interesting is they were all on the pictures. They were happy to be on the picture of the signing. Yeah. Labour was happy to be there, but.
The thing is, there was just one last point. I mean, and this is a fact. This is that statistically, if you look at that labour force survey, agriculture is not a unionised labour force. I mean, there's like 3-5% representation of the unions in labour. So it's rather a question. I think, honestly, the master plan is good for employment in agriculture. And I think if once we can get this narrative and just sit down and just really convince them, saying we can create jobs with this plan. The commitment is there. I mean, the enforcement of labor laws, and it's so internationally linked. The enforcement already comes through these value chains, globalized value chains. If we look at the labor force survey, agriculture is the primary sector that's now adding great benefits to its employers, and that's not even enforced, like pension, your vacation leave, your overtime. If you look at those stats, it's agriculture is moving in the right direction. I'm not saying that we still have these anomalies of misuse of labor and bad treatment. That's still happening. We need to get that out. But the key message is we can create jobs. We are treating them well. The stats are showing that we are treating them well as from the agriculture side.
Thank you very much. From my point of view, let's give a hand to my panelists. Thank you very much. Nico Pinaar, Ferdi Meyer, Kokkie Kooiman. Well done, guys. I really enjoyed it. We covered a lot of ground, and I want to thank you all for your participation. Kokkie, Higu, I know it's your first time at Nampo, and I hope you get an idea of the size, the quantum, the depth of the agriculture sector. So from my point of view, thank you very much, guys, and thank you for coming across. For you, the audience, thank you. I hope that you found value in this discussion. I certainly enjoyed it. Thank you very much.
Thank you.